Hello friends, today we will talk about the new law on provident fund investments from 1st April 2021. So interest earned on employee contributions beyond 2.5 lakhs in provident fund account will be taxable from 1st April 2021. What is important is only the interest portion is going to be taxable, and that too when employee contributions are beyond 2.5 lakhs in any financial year. In terms of impacted employees whose basic salary plus DA is more than 1,73,000 per month, and therefore they are contributing PF of 2833 or more every month will get impacted by this change. Also, employees who are contributing to VPF and their VPF contribution plus their employee contribution exceeds 2,50,000 per annum. So let's take an example to understand this. There are two employees. In case of first one, employer contribution is 1 lakh rupees per annum. Employee contribution is 1,15,000 per annum, and the voluntary contribution is 1 lakh rupees per annum. So total money which is going into PF account is 3,15,000. In case of second employee, employer contribution is same 1 lakh. Employee contribution is same 1,15,000. VPF is higher. It is 2 lakh rupees per annum. So total money going into PF account is 4,15,000. Let's see the taxability now under the new law. So employer contribution is not impacted by the new law. So there is no change there. Employee contribution in case of first employee, it is 2,15,000. In case of second employee, it is 3,15,000. First employee does not have to pay any tax on interest earned on 2,15,000 because it is less than 2,50,000. But in case of second employee, total employee contribution is 3,15,000. So he has to pay tax on 65,000 rupees, which is 3,15,000 minus 2,50,000, which is the limit allowed in the new law. And only the interest income. So just remember this, the taxable portion of employee contribution is 65,000 in this example. And interest earned on this amount, which is right now at 8.5%, will be 5,525 annually. And this interest amount will become taxable. So if employee's tax rate is 20%, then he has to pay 1,105 rupees as tax in year one. Should I continue to invest in PF? The answer is yes. If you like limited risk investments, please continue your investments in PF because PF returns are still higher than fixed deposits, which give less returns as well as they're also taxable. So continue to invest in PF in case you like limited risk investments. If you want to explore moderate to high risk investments, then you can diversify and put more on shares and mutual funds and some of the other instruments which are available. Please subscribe for more such content. Thank you. Jai Hind.